Just doing a sound check, folks. Hey folks, welcome to the Kendall Report. A little bit after 9 p.m., got a little late start here, but fair amount to talk about. My notes are pretty lean tonight because I'm looking for relevant things that might be affecting the markets. Of course, it's all about the FOMC meeting today. There are some other metrics coming out, but we look back at yesterday, another strong day, ATH across the board, all-time new highs, S&P, NASDAQ, Russell, up 0.4, 0.3, and 0.2 respectively. So, you know, it just continues on, right? There's nothing to stop it, you know. The meme stocks only go up, sure feel that way a lot of times. But we're definitely still in the possibility of seeing some sharp acceleration. I know an awful lot of, just get into talking about the Fed a little bit. I know a lot of folks, it's all about the taper. There's so many people that think that the taper is going to be negative. I don't think it's going to work out that way. It's already priced in. That's my argument right now. The headline for tonight's video is, will the taper matter? And the answer is no, not whatsoever. All they're doing is taking their foot off the pedal just a little bit. It's not all the way on the floor. Now it's halfway up. So instead of going 120, they're going to start to taper 30 billion dollars of purchases on mortgages and the treasury. So nothing really going to change here. Not really going to affect anything. You can see a little bit of a bid in the 10-year. We're back to that 155 range. I've been telling you that's where we're likely to be stable around that yield level. Nothing really. I think from just unpacking a little bit more about the Fed is we're really not going to see a dialogue change other than they're going to start to discussing the taper, probably start in November. And just about everyone out there, the expectation is they're going to do the taper all the way to June of next year, 22. And then in July, they'll start to do liftoff. And one of the things that I'm going to refrain from making that prediction is too mainstream, number one. But number two, I still think, I've talked to you off and on about this over the last couple of weeks, is that we have will the dog wag the tail again? So the Fed's been driving everything, and the tail's been wagging the dog, and we're going to need to see, and I'll talk a little bit more about when I go through the treasuries tonight, but we're going to need to see the 10-year get over probably 168, maybe even the 175 number to even wake these guys up. They're not going to change much of anything as far as I can see here. And there may be a couple words parsed out. And I suspect that Powell's overall speech that he'll do at the conference call tomorrow will be as boring as it usually is. So I don't see anything there. So I'm calling that the taper's priced in. I don't think it's going to have much effect. The difference is they're just pushing money out there fuller. And if you didn't see my rant, I would actually direct you back to a couple of videos ago. But I talked about what's really going on with the Fed, and they've got this entire tub filled up with trillions of dollars. Now what they're trying to do is get these laws passed, the infrastructure deal. Once again, looks like it's failing again. They can't seem to get the reconciliation bill even close to the floor. And, so once again, the government's totally inept. They're incapable of actually accomplishing much of anything, especially something that's going to help the markets in any level. So expectations are the Fed is going to keep adding money till next June. That's probably a thing. I don't have an argument with that. I just want to see that maybe liftoff happens much earlier. The other narrative that is out there, and it is mainstream, it's right out of Janet Yellen's mouth, it's right out of Powell's mouth that you'll hear tomorrow, is that we expect inflation to moderate at the end of first quarter, Q1, Q2 of 22. And that may not be what happens here. It'll be interesting to see what we can kind of nail down. I should be able to come up with some pretty good ideas on this stuff as we go further down the road. But for right now, that is the mainstream dialogue is they're going to taper until June, lift off next July, and inflation is going to moderate as we come into the end of Q1, Q2. That's standard procedure right now. I'm not sure I'm on board with that. At the moment, that's just what the markets are thinking. If that's the case, then that means that there's not going to be higher interest rates. There's not going to be pressures on the market. So we just keep on rolling like we have been rolling. So I do expect to see that type of mentality / sentiment flow through the markets. So what else is going to happen tomorrow? We have ADP coming out, expected 400,000 jobs. We're working our way toward the big report this week, which will be unemployment. For that 400K, we'll see if that means anything. We'll see what kind of numbers they have out there. I don't have any real expectations whether it came in less or greater that it's going to have a big impact. Factory orders expected to be up 0.2. ISM services. Now this could be watched fairly closely because the services area is the biggest part of the economy. This is expected to come in at 62.3, but overall nothing's going to matter until we get to the Fed meeting and all into that reports and the conference call. So we'll see. We'll have to look at that time. That's it. There's really nothing else going on. I don't see any impact. Futures are down slightly across the board right now. Matter of fact, I would call them flat more than anything. So nobody's taking any big protection. Nobody's scared of tomorrow. And that's why it looks to me that everything's priced in. And I think a lot of folks are going to be a little bit disappointed, expecting some sort of decline there. Let's take a look and go over and look at the database here as far as what's going on in the WaveTech database. We're getting more traction. We're up at 45.19. We had 520 buys, 300 sells, so still kind of a rotation, but positive nonetheless. Let me zoom in on that so you can see that. So here we are between the two models, 520 new buys, 300 sells, neutral to bullish on these models, so nothing really significant, bumping up at 45.69. And as I've been talking about for a while, is this database just continues to rotate. And over the last year, I remember all the trolls that were out last year, and we came into September, October, November. Our database was buying both hands, and I was being told how wrong I was and that the market was going to roll over, double dip, recession, and none of these trades are going to work. Well, a year later, market's up a lot from there, and those were really good buys. So what we saw in 2020 was the short-term models carried us. We literally started buying with both hands on the 26th of March, and into April, we went from almost, I think it was 12% long to 55% long in under about 3.5 weeks. It was really screaming. We were buying everything that out there just about, and it ended up that the short-term database got up to 90% long last year. So we came into June, we started to see the rotation and all that, but the big intermediate buys came in about a year ago. I talked about this over the last, we'll say 6 weeks, that our database was actually getting somewhat mature. We were up around 72, 74% long. We're now on the intermediate level. I'll just put this on the screen. I know it's somewhat small for what you can see, but the intermediate is now at 42.71. So we basically rolled over 20, we'll call it 25% of the database. So what happens in these market cycles, and trying to relate to where we are right now in the market cycle, is that we get these rotations. So looking back in the last year, we saw 6 rotations of the short-term database getting very bullish, recycling, coming down into below 30%, going back in 70, 80%. I don't think it ever got to 90 again. And each time it got a little less, but we saw the rotation. And so now where we are, we've seen the intermediate back off a little bit. We were up to around 80%. And one of the things I'd never seen happen in the database, and I don't use the word never very lightly. I don't like the global label anything, but I've never seen that the database duration, or the amount of time that we hold these trades, exceed 100%. We were 120% extended. So when people talk about the markets being extended, we really were. We saw the database pull back to 42. And if I go over to that page right now, I think I can zoom in on this. If I, on the right side, if you're a WaveTech user, you'll see over here, what we're looking at here right now on an optimized weekly. Typically we hold 202 days. Right now the average is 64, but more importantly, the current average profit, this number here, the percent duration fulfilled, is at 33.8. And just about 2.5 months ago, that was at 120%. So now what we're seeing is a major rotation. There's a lot of trades that we have backed off of. And I talked about this a lot. I'll just finish here. Is what the database is telling us is that not that the market is turning negative, but it's actually telling us that we're just seeing fewer stocks run in this cycle. And what typically will happen as you get up into these nosebleed areas and the all-time new highs, you start to see fewer and fewer stocks driving those markets higher. I'm going to take you over to another page here just real quickly so I can tie all this together. And this is important to see as well. Let me bring this chart up. And this is the database here. Let me go to full screen. What I want to show you here is that this is the history going back to 2017. And I've talked about this before. I think this is a good time to have this conversation, is that the peak here was roughly, this is a rough estimate, okay? Was roughly about right in here when we were about midpoint in this rally if we go back to last year. This is right about here is when we started to get all this traction in November, and this is what you can see a couple levels here. We did get decent traction in May, and then we saw more traction in June, but it backed off, and then we started to see this sharp acceleration as we came into November, pushing us up into that 80 percentile range. Now what we're seeing is this is declined substantially, and I'm going to move some of these lines so you can make sense of this. So what we're seeing is the percent bullish decline while the market was going up. And this is very typical. This happens a lot of times. I wish I could have more database to show you here of this, but there is definitely, this happens a lot because this is the narrowing of the market. So anybody that's following the markets, this is what's going on. So I'm going to tie all this together for you. This is what happens with all of this stuff is when you get into these type of cycles, this is what I call a refresh cycle, and we're right there depending on how the market holds. The next, I'm going to call it the next 2 to 3 weeks are going to be very critical, and to see if we start to get traction back on the intermediate database. If that happens, we continue to see traction above, I would say 62% on the daily, and we're going to be on to the next level. And I am afraid to tell you some of the numbers that are coming out in the analysis and where this market's going. So I'm just going to keep it step by step like I usually do. When I go through the technicals here, we'll talk a little bit more, but there's some crazy things going on in this market at the moment for sure. So let's go ahead and move out of the database. Let's go over to the ETFs, and I'm sorry, ETFs, the E-minis, and look at that. We're down 125. I'm going to take off something here 1 second that I just don't want to have the models up here. I went through that last night. I'm going to take the models off for a moment. We're continuing, as I've been talking about for a while, and I'm not sure, bear with me, we've been climbing this rising 10. I talk about this rising 10 strat move, and now what we're seeing here is PPM1 is failing a little bit. What it means is we could end up touching on the 10-period moving average. It's 45.78, going up 10 handles per day. It's starting to lose a little bit of momentum, but it's still strong enough to keep things moving higher. The PPM2 is at 0.30, and I talked a bit about this last night. This is the moving average to watch in this pattern. It's 44.93 right now, going up about 16 handles per day, and that's going to come into play not until probably next week. We should stay over the 10 this week, and then ultimately we'll see this 21 come into play, and that will be the point where we get the next acceleration to the upside. I don't see any, this is not the pattern that we're going to look at from the standpoint of calling some kind of top here. It's just not there. The PPMs are starting, like I said, PPM1 is rolling a little bit, but there's too much positive going on here. Let's go over to, before we do that, let's take a look at the expectations. Yesterday was basically an S1 R2. We actually printed R2 was 46.26.25. We were 75 cents off that print. And on the downside, low 93, S1 was 96. So pretty good for as far as the patterns go. We look at tonight and for tomorrow, S1 is 46.14, R2 46.42. This is the futures. Probably looking S1, R2. I don't see a big negative push. The only thing that could happen if we had a spike in volatility with the Fed meeting tomorrow, we'd see an S2, R2. That would be my expectation. I still think we're going to see this thing can move up along this line and continue this upward trend. Let's go to the SPX, go to the S&P cash. This pattern is also, everything's very similar. We're at a 0.35. The cash is actually a little bit stronger as we come into today, but this should keep us in that upward channel that we're seeing here. And if we look at for numbers for today, what we're going to look at here is S1 42.23, R2 46.45. Yesterday's high was 35, so that would be another ATH. And I don't see us running away, but the next level there is, we look at tomorrow's numbers, 45, 52, and 59 is RTX. Okay. Next market, NASDAQ. All of these indexes are, I would not say all, but certainly the NASDAQ and the E-minis are in the same configuration. And what we're seeing here is just rising along this 10, ppm 1.38. This is real time, so this is recalculated based on the last trade. ppm 2.40 and ppm 3.05. But this has been the case for almost every rally that we've had for a while here, is that the NASDAQ, from a profile of the from the ppm's perspective, is that it has stronger trends. When we are trending up, it seems to be a bit stronger from the standpoint of what the ppm values than like the S&P, and certainly the Russell is much weaker. We've seen, a lot of sideways movement for most of this year until recently. We're finally seeing some movement up, but the ppms are just continuing to be in that mode. As far as the expectations for today, S1 15,918, and this is the futures. We're looking at an R2 16,052. We printed 15,967. So not quite an R1 yet, but I do expect to see it push up in that upper range, 52, possibly 16,100. So it's hard to believe that we're talking 16,000 numbers on the NASDAQ. I remember back in 2000 when the dot-com burst happened, we got to 5,000. That seemed crazy. Now we're over 3 times that number. And you wonder, would it ever take out 5,000 ever again after declining, 78%, something like that. And now here we are at 16,000. So, and there's a lot of new stocks in the index and stuff that helped it to get there. So it's not the same subset of stocks there. So yeah, so that's going to be the range expectations for today. Let's go over and take a look at Russell. Russell was up 0.16, not quite 0.2. We got that RTX sell signal yesterday. And we closed just slightly higher. We should have at least one more day sideways in this pattern. It may be that the Russell will lag tomorrow, but we've got great PPMs here, 0.37, 0.30 on PPM 1 and 2. This just tells us that that angle of attack is really going. And for the first time, I would argue, I would say that we actually have a trend in the Russell, right? For the most part, it's been, we had one going back in August. It did okay. This is really significant. I think this time that we're going to see this thing start to pick up. And this is why when I go talking about the database just a minute ago, is that it's important to see that short-term database kick in. And what I'd like to see on the intermediate database is that we start to see some new traction there, but the traction would be in the small and mid cap area. And if that we get that kind of traction, then that's telling us that we've got a fair amount to go. And all of a sudden, as we set up for the rest of the year, we're going to see probably a positive, fourth quarter all the way through. We're in the second month of the fourth quarter, and unless there's some surprise, which I don't at the moment don't see that coming up at this time. And the only thing that I think, and I mentioned the other night, that could derail some of the bullishness in the market would be if they got the tax deal together and they made that pretty ugly. So, if you're watching the world scene right now, you'll notice something very interesting. And I think what you're seeing is there's a couple words to talk about: the Build Back Better and the New World Order. And what you're seeing from the G20 and from all these climate talks right now is there's two things coming out of here. It's my opinion that they're right in front of our face, they're starting to actually form a world government. The UN has been wanting this forever, and they're starting to do that. So they're using taxation. They've got, all the big boys to promise what are you going to do if you're in the Caribbean or you're some small little place. You're going to get bullied around by the big boys. So they're making this agreement. It's phase one. They're going to come up with the next phase. Trudeau was talking about some things that were kind of scary, in my opinion. And so they're starting to form this. And then ultimately, the digital dollar and other currencies are likely to play out of this. So I think we're seeing some scary times here from that standpoint. Does that mean it's necessarily negative for the moment on the markets? I'm not sure about that. But when I saw some of these images over the last several days, it really kind of slapped me and went, what's going on here? What's going on? What's with this minimum tax across the planet? What's really going on? What's really being organized? So enough of a conspiracy theory. But those are things that I see happening that I think are worthy of watching very closely. So let's go on to the Russell here. And like I said, we got that. I want to go to the spread, and the spread is continuing. It actually looks okay here. It downticked just a little bit yesterday. It downticked just a bit, but it's still seeing some nice acceleration. My expectation is we'll continue to see some more traction in the Russell. And as we get toward the end of the week, and tomorrow night and Thursday's video, I'll talk a little bit more about what the expectation is after we see market reaction after the Fed tomorrow. We'll have a better feel for it as we come into Thursday and Friday. So we're mid-show here tonight, and I just want to come on. And last night I covered Tesla, and it was interesting because we got that RTX sell signal. If you notice, Tesla responded to that signal. We had a 3.5+% down day in Tesla. I think you see a couple more days. The last time that we got that, I'm not going to cover it. I'm just going to tell you, last time we got an RTX sell, it was a significant high, and we were very close to the minimum target. So if you want to go back and watch that, nothing's changed from the analysis I did last night. Go watch that video on Tesla so you can see exactly what I was saying if you didn't see that last night. But we definitely have set up something there. We all know, everybody knows, even Elon Musk knows that Tesla is not worth the price it's trading. It's definitely just seeing a lot of enthusiasm. And I thought it was interesting that Musk would come out and say, hey, there's no deal with Hertz. We don't have anything signed. So that's interesting that a CEO would do that. He's been known to do things like that before. So we'll see how that plays out. But I think a couple more days sideways, and if there's anything happening there, I'll come back and cover it again on the show. So the rest of the show, we're going to do the 10-year next, look at the yield curve some more. We'll hit that. We'll do crude oil, gold, and Bitcoin, and we'll call it quits tonight. So let's go ahead and get into that. All right, the 10-year closed at 1.49 yesterday. This is the daily chart. It's interesting as we look at this. These dots here are what I built this Fibonacci cluster tool back in the, crazy to say, but back in the 80s. I've used this indicator for quite a few years. And we're starting to get something looks like a possible cycle low being signaled, and the keys to watch here. And it's interesting because all of a sudden the ppm1 is a minus 0.53. That's a pretty big number, and ppm3 is a plus 30. So what's likely to happen here is we're going to say between the bottom end, we're just going to round it at 150 to 160 range. That's what's going to happen. I'm going to watch this cycle that's coming in, whether this ends up to be a cycle low. Maybe we get a spike or something like that. And maybe it prints down to some extreme tomorrow based on whatever the Fed says. So there's certainly going to be potential volatility here. But just looking at the range for tomorrow, we're looking at 150 downside 151, 149.8. We'll call it 150. So that should be the minimum. If we were to get below that 150 and close under there, then that would indicate a STX buy signal and put us back into range again. So I don't think this will get too carried away. But this ppm1 at 0.53 minus, that's a big number. That tells you there is less than a 30% probability to go above 1.6 right now, and that it's dropping about 1 basis point per day. So we come in tomorrow, that's going to be 159. Meanwhile, the 40-day moving average is still expanding at 0.30. So you've got probabilities on both sides. You got a cap on the upside and somewhat of a floor on the downside in this current environment. Let's take a look at the yield curve real quick. This is the 1030s. Maybe they've finally peaked out here. That would be somewhat of a good sign. And this goes to the concept that I was talking about of whether the dog will wag the tail or the tail will continue to wag the dog. And what I mean by that, who's going to lead who? So if the markets would have to continue to flatten substantially to probably get the Fed to move on a liftoff, that's not going to happen. They're going to give this taper thing, and like I said, it's going to happen maybe later this month, maybe not till next month when they actually start the taper. That'll be the interesting thing that happens, and there may be some emotion and volatility around that. But this will be the place to watch if they announce that, how this spread moves, and I'll cover it tomorrow night. So let's go to Let's go to crude oil. Crude oil's getting hit a little bit, and we're continuing to trade down into some of this daily support that I've been talking about. The extreme I'm seeing is still around 81 and a half. I'll show you on the weekly. There'll be some downside, potentially down to 78. Look at the PPMs, they're all rolling over here. So they're definitely starting to set up some kind of high level consolidation on a short-term level. We go over to the weekly chart. And weekly chart is really set up. If we look at market grid, it's 80.63, 79.73. That is the bottom of the range from a market grid standpoint. The 10 period moving average 76.80, so $1.50 a week. So as we come into next week, that's going to be 77, 78.30. So that's going to be your absolute bottom end of this range. PPMs are just very strong, even though they're into that. I went through this last night, that trend maintenance mode that we get into on an intermediate basis. So these upward slopes, these trends are pretty positive. And let me go over to daily gold next. Gold just continues to be absolutely stuck in this range that it's been in and can't get out of the way. PPMs are very, I would call them neutral. There's no real anything here. There is, right now, the downward risk is down to the 1726 level would be extreme. That's 50 handles lower. Don't see that happening, but that would be your extreme. But I think the key is going to be on a short-term basis, is just staying inside the grid. 1770 is the low end, 74 to 70 is the low end. So let's look at the weekly. And weekly, same numbers, same station, broken record. I've got to get over 1793 and really 1800. We've got to get above that level to actually get anything going here. Still like how the PPMs are set up. So I've been telling you that 2 more weeks. So this is week 1. Week 2, as we come into next week, I think we're going to start, if we stay stable, nothing, no collapse, we don't print down to those lower numbers I just mentioned, then I think we'll be able to finally set up an intermediate potential bottom to move this market higher. And here we go for Bitcoin. I did see a comment last night. I will clarify this. I've been talking about we did not close above this 60,612 number that this number's been on the radar going all the way back to May 23rd of this year. Earlier this year is when this number came out. This is still a valid number. The 85 to 106 upward objectives, that's 85,000, 106,000. Still valid objectives. We're still seeing this rising 10 in the pattern. PPM 1 is this is weekly Bitcoin, 2.93, 2.56, and 1.57, and anything over 0.25. So this is like 10 times more than enough momentum. The probabilities of going below 53,719 right now is about 10%. If you saw that number, that would be your buy the dip number from that standpoint. Let's take a look at the daily so we get a short-term perspective. Daily's already rallied up. The thing I've been telling you about is to watch this rising 21. And it's got a 0.72 range on it. PPM 1 is actually 0 right now. I think all these PPMs are going to turn up. I wish I could bring this chart down so I could draw in, but I think we're going to go up and re-challenge this 60, we'll call it 67,000. I think we'll re-challenge that number over the next couple of days and start to see some acceleration. Markets held almost exactly where they should have held. We got down to, let me see what the low was the other day, 57,998. I talked about 58,000. That was the magic number there. Now we're starting to see some pretty decent acceleration. We're almost about to get an RTX sell signal. If we did close, this will be the number, watch at midnight Eastern time. If we closed above 63,587, that would give us RXT sell 2 days sideways, and then we'd be looking at the weekend from that standpoint. Okay, folks, that's going to do the show for tonight. About 40 minutes. I'm trying to keep these things as short as I can. There's just a lot to talk about. And I went through the database, so make sure you understand what's going on with these trends. And boy, I love a great short sale with the best of them, but there's just none of that out there right now. And like I said, when the replay comes up, we'll get this thing marked up so you can find what I was talking about at different areas, so you can definitely go through that. So anyway, folks, thanks again for watching. I was trying to look at some of your comments, and it's pretty funny. I would just make one comment on the solar panels. I think if you covered every inch of the earth with solar panels, you still wouldn't have enough energy for much. And the other thing is you would ruin the planet with solar panels trying to save the planet. So with that bright note, we'll let it go. Thanks for watching, everybody. Appreciate you all coming every day. Really means a lot. Thank you.